Good morning. It's Friday, March 15th, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's small correction. You have April gold up $3 at 21.71. May silver up 30 cents, 25.36. May copper up 5 at 4.09. April platinum up $8 at 9.44, and June palladium up $27 at 11.06. So the gold silver ratio is still pulling back here at about 85 to 1. So that's been about the support level that it's gotten on the year before it starts to cycle back up. 92 tends to be overbought on the particular ratio. 85 seems to be oversold. So silver is definitely accelerating on gold right at the moment. Now, yesterday, that correction was a result of the PPI data coming in 0.6% hotter. We also saw fewer applicants for jobless claims, and the consumer is starting to cool off on their spending with the weaker retail sales. So markets are really looking forward to next Wednesday's Fed meeting, and it's not what they're going to do, it's what they're going to say. We've seen inflation and employment. They've remained elevated here recently, so markets need to adjust a bit to that data. If you look at the CME's Fed Watch tool, the March 20th meeting, only a 1% chance that the Fed does anything. You go out to the May meeting, it's only a 7.6% chance that they do cut. And you go out to June, it's about a 58% chance that they cut. So all these expectations are coming down, and that PPI is really what cemented it. Remember, PPI data ties directly into the core PCE data, which is the Fed Preferred Watch tool. So that uptick here made those small revisions going forward. We have seen a lot of the different commodity complexes remain elevated here, with crude oil recapturing $80. You've seen live cattle, feeder cattle all accelerating higher. Many of the softs are near record highs, especially on the cocoa market, making a record high. And then the agricultural products had all turned around and started moving to the upside. So that has going to have to weigh in on some of the markets. Now, we did see Bitcoin overnight correct down about 3% here. So the March contract below that 70,000 level, about $67,520 as of this video here. U.S. equities slightly elevated, but they are looking a bit toppy. Now, I did see a report put out by Goldman Sachs. They had a portfolio hedging toolkit. They basically are citing that there's market risk with the S&P 500 near the all-time highs, and the volatility of those options are extremely low right at the moment here. So they favor that the risk reward of putting on some kind of protection on the downside on the S&P 500 is favorable. They also talk about technology, and that how over the last year, prices of the XLK have rallied about 50%. They think that that might be a little bit toppy. And then they also cite China's risk here with the election. So if you do get somebody like a Donald Trump in office, he's very hard on China. China could correct on that type of development here. So you want to kind of watch the polls. Now, historically, when you go into April, the market does correct down to about April 15th. I think that people unwind some positions, square things up for tax purposes. And then after that, the market tends to gain momentum back to the upside. So the large upswing on the silver and also the copper market are really tied into China. Those smelters, which account for about 50% of the global copper supply, are coming offline. So you're going to see, remember, silver is a byproduct of copper, and that's why you're seeing that upward dance here and move higher. I did outline a strategy, if you didn't see it on yesterday's video, where I talk about a way to scale in with limited risk on the silver market, on the copper market. We didn't break below $4 on copper, so you wouldn't have gotten filled on that. We came close on the silver market, breaching right at that $25 level. The overnight lows was $25 as well. So I'd really like to see some kind of test of some critical support level. So on the gold market, I'm still standing firm with 2150. A close below that, I think we could wash out pretty quickly on that market, as it would form like an upside down U pattern, and we'd start to break down from here. Now you look at the silver market, it is starting to kind of go trend higher. So we broke out above yesterday's high, kind of shrugged off yesterday's development. So $25 kind of your line in the sand at the moment for short-term traders here. So you got any questions, give me a comment or write up an article, throw it on Kitco here today. And then if you got any questions, you can always text me on over the weekends. I'm either fishing, hanging out on the beach, or reading market-related commentary. So you got any questions, give me a call. I'd love to talk to you at 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.